Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I am Darshan Mehta. Let's welcome our experts then. Mayuresh Joshi of Angel Broking and Chintan Vora of Finance.com join us on the show. Thank you to both our guests for joining me on the show. Today on Hot Money, we'll discuss stocks like Dish TV, United Spirits, the sugar sector, as well as Adani Enterprises. Now, the first stock that we want to talk about is Dish TV. The stock is trading at a fresh 52-week low. Again, it is trading down by 0.5%. The big question that we're asking our guest on Dish TV is whether the business model is under threat. The company has been under tremendous pressure. So that's the question that we're asking. So Mayuresh, you have 1 minute for your opening statement. Do you think that the business model of Dish TV is under threat now?
Afternoon, Darshan. No, I think the business model per se is not under threat. What is happening is the ARPUs are dwindling down because the majority of their revenues come from rural and semi-urban areas, and you've seen a very weak rural recovery taking place. So 75% of the subscriber base comes from these regions. The second element also becomes the higher selling and administration expenses. So that is putting a dent in terms of reported numbers. But the synergies in terms of what happens with the Videocon tie-up is clearly going to be a trigger point for the stock. So I think no weak links within the business model per se. I think it is the weak environment that it is operating out of that is causing pressure onto the stock. Okay,
so that's the view. Mayuresh believes that there is no business as threat as such to the business model. But do you believe that there is a problem? Is their business model under threat now?
Okay, so I would slightly differ from the thought.
Okay,
it's not business model which is under threat. But look at the the surrounding environment. There's a lot of there's a paradigm shift which has happened from a traditional television model that people really do prefer to what they prefer is a smart set of boxes, the internet-based kind of televisions. There are OTT players which have come into picture. So there's a lot more that Dish TV will have to do to revive in terms of their pricing innovations and even onto the product solutions.
Okay, so that's the view that's coming in. I think we've got differentiated views, so we'll ask our guest. Firstly, Mayuresh, you spoke about the Videocon merger. How do you believe that it will create synergies for Dish TV? How will that benefit it?
No, so to a large extent, the management is hopeful of creating a 185 crore synergy in the next financial year and a 510 crore synergy in the year after that. Even if you discount to a certain extent the kind of synergies they are talking about, the subscriber base gets added significantly. So they've added almost 250,000 odd subscribers in the quarter gone by, taking their individual subscriber base to 16.1 million. With Dish TVs, with Videocon's addition, I think the subscriber base gets added significantly. But what it does is the content cost of Videocon is far higher. So I think it constrains the kind of leverage on the operating front. Dish TV works at 29-30% kind of content cost as a percentage of the top line. Videocon's around 37. So I think there is going to be cost saving on that front. The second element, as Chintan was pointing out, is obviously a risk factor for Dish TV in terms of new OTT players coming up, what is happening in terms of digital streaming and so on and so forth. But they, again, I think they're innovating on that front. So I think the discounting packs that they've got a new hybrid set-top box. So I think that is going to probably create more synergies going forward. And again, valuations, I think, even if you look at standalone Dish TV valuation and EV/EBITDA, not too expensive as it was a couple of quarters, 3 quarters back. Including synergies, it becomes even more cheaper because of the addition in terms of the subscriber base and the revenue contribution that can come through. So I think valuations are attractive. The only factor point is that the recovery is going to be very, very slow and gradual. So one really needs to have a longish view.
Okay, Chintan, do you believe that the synergies will definitely flow in from this Videocon merger, or you have a different view here?
Okay, so I certainly am of an opinion that synergies will certainly percolate down to it making a little stronger brand and even the player in this particular segment. Now, while we talk about the entire merger aspect, they will bring in a lot of positive synergies. We've normally seen, these are all strategic corporate actions that takes place, and wherever there is any kind of a corporate action that takes place, the synergy might take its own sweet time to percolate down or to give some kind of a profitable profitable kind of a scenario. But especially in case of Dish TV, the valuations, as he rightly pointed out, are pretty low. Currently, when we see Dish TV, it's trading at par with the Feb 2016 kind of prices at this point in time. So it being a very cheaper on the valuations, yes, they have already taken a positive step in terms of innovating technologies. The only thing that they will have to look into is the kind of a pricing model that they have. So they have a very fixed pricing kind of a model. This certainly needs a lot more of a tweak. and with Videocon DTH kind of a tie-up, they will have their footprints into little more of an urban market as compared to what they have more of their business footprints into rural markets. Those will certainly percolate down into a good synergy and hence could be a good move for Dish TV going forward.
Mayuresh, the merger will definitely happen, but financials have been really poor for Dish TV, not only over the past few quarters, over the past few years now. What on that basis? Because that is certainly not giving any comfort.
No, it is not, and that's why I said I think the recovery process is going to be very, very gradual. Even if you look at the ARPUs, they reported 149 rupees in Q2, and actually come down to 144 because of the weak rural recovery that we've seen. Even in terms of margins, they reported 27%, but the management is hopeful of maintaining that margins between a 29 to 30% kind of a band. The third element in terms of the packs that Chintan was mentioning, I think the variety that they've got in packs, and as recovery starts taking place, with digitalization taking place in phase 2, phase 3, I think a lot more can move probably towards DTH guys, and because of the merger taking place as it happens over the next few months, I think the obvious synergies in terms of having a consolidated pack generally for the rural and the semi-urban crowd is something that can pull them through. Okay. So again, I think numbers have been weak. I think it is going to be a slow and gradual process, as I said.
And you don't think this entire issue with, OTT as well as smart TV coming in, that will be a big issue?
No, it's going to be disruptive, so I think they need to be innovative all the time. So I think all these players within this space, whether they are DTH guys or even your broadcasters, you look at Z, I think Z5 is something which is coming on as an OTT channel as well. So the kind of digital investments that will go through is going to constrain cash flows. So I think patient investors probably need to be a lot more patient with stocks like Dish TV, because I think the recovery in terms of earnings is going to be very, very slow and gradual.
Okay, so that's the view that we are getting in on Dish TV at this point of time. Mayuresh does believe that, the synergies will definitely play out with Videocon DTH. The business model is not under threat, but a little contradictory view that's coming in from Chintan. He believes that there could be some issues because of because of the issues that are there. As far as the merger is concerned. The next stock that we want to talk about is United Spirits. The stock is down almost 20% from the recent highs. It's a marquee stock, but is it the right time to start accumulating United Spirits? That's the big question that we are asking our guest at this point of time. Chintan, good time to start accumulating United Spirits, and if yes, why?
So ever since October, the stock started taking a lot of rally up. Even despite the crash of 20% from its recent high, which happened way back in Jan this particular year, it is still not discounted in all the profits that it gained over a period of time. So a small correction has happened due to a lot of policy changes, and this one sector has got a lot of policy impacts, even like sugar sector. So when we talk about policy changes, there were liquor bans in some of the states, as well as near the highways. So all this has gotten a lot of pressure onto the entire sector per se. But when you talk about US as one of the stocks, yes, this is a very right time to start accumulating, because the demand is going to keep stable, and they have got more route to market, more than one which they had earlier. So because of extended route to markets, and the reach of market is even stronger than what it was earlier, this could be a very right time for any individual to start accumulating into stocks.
Okay, so that's your 1 minute up. I'll come back to you with your other points. Mayuresh, your minute, is it the right time to accumulate? Yes or no? And if yes or no, why?
No, not at this point of time. Okay. So I would concur with Chintan on most of the points. But what has actually happened in terms of the highway ban, I think those issues are behind them. A large component in terms of the regulatory issues and with taxation surrounding GST is also seemingly behind them. But with a lot of state elections expected to come through, I think the political overhang obviously remains. The second element also remains in terms of their overall distribution network, the branding prowess that these guys actually have because of the constraints, and again pricing power. So I think the entire industry is moving towards premiumization, but whether they're able to sustain volume and pricing is a key issue at hand. So at least not at this point of time. I think there will be better entry levels in my opinion.
Okay, so better entry level is something that Mayuresh is saying when Chintan says it's the right time to start accumulating. Chintan, I'll come back to you. The numbers are not showing. The core business is not growing. If you see what's happened, I think that seems to be the big trouble for United Spirits. You think that over the next few quarters they'll be able to get their act right?
Okay. Now again, a lot more depends on to how the policy actually changes. And a very important factor that Mayuresh just identified, that there's a lot of product premiumization which is happening into this particular sector. Moreover, there is also an expectation that the prices will go up. It is all because of the GST factor which is coming into picture. Now, with all these elements rightly in place, I would not say that you go full force to start accumulating this particular stock, but certainly on a staggered basis, you can keep accumulating this particular stock because the top line seems to be really good. The pressure certainly seems onto the bottom line. So once the right policy comes into picture and the right pricing and the more product premiumization comes into picture, this stock will certainly yield much better results as to what it is shown in the past quarter.
Okay, Mayuresh, are valuations fair for United Spirits? It's trading at close to 80 times this year, almost 60 times next year. It's a no doubt consumer stocks get that type of valuation, but with the financials that it's showing and the risks that are there, are such valuations fair for United Spirits?
No, valuations are always on the higher side, Darshan, for United Spirits. And you're right, I think it's part of the consumption story. But a large element in terms of how their top line is expected to grow, because if you look at the prestige and above segments, I think they contribute almost 50% in terms of the overall volumes. And it's been a clear strategy for players like United Spirits or even Radico Khaitan to probably move towards the higher end or the premium products, as we call it. The second element in terms of pricing, I think the pricing has improved marginally over the period of time, but it's not possible for these players to keep on increasing prices along with state hikes and excise hikes that happen. I think it's an element that some portion of that gets passed through. How much does that impact the volumes is also going to be significant. Again, Diageo's contribution in terms of brands that it got, specifically the premium marquee brands, I think the introduction thereof and expanding the digital or the distribution footprint is going to be important. So if you look at the last quarter's numbers, a 13 crore exceptional item was incurred by United Spirit in terms of expanding its supply footprint. Okay. They need to continue doing that in terms of creating a mass in terms of their prestige segments and then dwindling down factor of their lower products is probably taking place on their balance sheet. So I think the numbers in terms of top line is going to take some time to adjust. Valuations, again, as I said, on the higher side, it will remain so for
So anything that you find cheap in this space that that you would start liking? United Spirits, you said that you will not accumulate at this point of time because valuations are high, and you see anything else that looks attractive in this space?
I think the argument is quite similar for most of the players. So even if you look at something like a Radico Khaitan or the other players, including a GM distilleries, my own sense is that the same argument probably continues. And if you've seen the pricing of ENA, which is a key raw material for these players, they've largely stabilized at this point of time. But the risk factor remains any increase in prices of ENA, the pass-through effect becomes difficult. The regulatory impact, again, in terms of what state policies can come through, becomes a key overhang for these stocks. And third, I think the consistency that one really expects these stocks to derive from volume growth, specifically in the P&A segment, along with price growth, because of the limitations that they've got in terms of pricing power, restricts the top line growth with a huge, humongous way. So I think unless numbers start coming through, which again remains a little bit skeptical at this point of time, valuations seemingly are looking on the higher side.
What about you, Chintan? Are you okay with the valuations, or would you look at a lower number for?
I would again second Mayuresh's call. The valuations are very steep. 80 plus kind of a PE, and when we look at even the price to book, it's already trading at 19 valuations. So it's certainly very high. But like how you already mentioned that valuations of this particular sector has always been very high. So when you ask me from the valuation standpoint of view, yes, it is expensive, but also matters is what kind of a potential it will deliver to the end consumer. Okay. So that's one way to look at it. So we advocate that there has to be a staggered buying process that should happen into this particular sector, because any policy change will take its own sweet time of probably 3 to 6 months to get executed and show in the books. So we already spoke about Radico Khaitan. So that happens to be one of a very promising counter, not being in a high capital kind of a segment, but the profitability and the valuation seems to be little fair as compared to United Spirits.
Okay, so I think the consensus, the broad view that we are getting in on United Spirits is that valuations no doubt is expensive. Mayuresh at this point of time is saying not the right time to start buying, but Chintan is not very aggressive. He's saying that on a staggered manner, you can start accumulating United Spirits even though valuations are on the higher side. The next one is that sugar sugar stocks did rally significantly, but over the past few days we've seen heavy selling across the board for sugar sector stocks. Some of them have actually reached a fresh 52-week low. So what we are asking is that, is the sugar rally over, and are there any good stocks that in this space that can be accumulated? So Chintan, I'll start with you. Do you believe that the sugar rally is over now?
So this is one sector which has always kept me very skeptical about how the prices are going to be performing, like in the stocks rather. So last 2 years, when we look at the entire sugar sector, most of these stocks have almost close to doubled. But the fundamentals and prices, they do not really match. I mean, they're not on the talking terms is what I feel. And of Jan, we have seen there is a dip into sugar prices. Now this dip is primarily because the consumption story remains to be constant, but the production is already beaten off than what ideally needs to be consumed.
Okay.
So this 15 lakh metric ton exports that the sector overall will have to be doing, and this is what is keeping the prices under control. So to complete my statement in 1 minute kind of a time frame that you have mentioned,
I'll come back to you. Yeah.
So whether is the rally over, I would say for a time being, yes, we see the rally being stagnant, but certainly it is not over for the end consumer.
Okay, what about you, Mayuresh? Is the rally over in the sugar stock?
My belief is yes, because I think the sugar cycle typically moves in a 2-3 year on-off period. So the 2 years preceding this year have been exceptionally good for sugar, because the production numbers were far lower and the consumption pattern, at least for the last sugar season, was larger. If you look at the ISMA production estimates that they've come out with, and what we've read through media reports, they're talking about 29.2 million tons in terms of production this year. You're talking of consumption patterns of anywhere between 25, 25.5. So you're actually looking at a surplus carryover inventory to be taken over next year. The second element also becomes in terms of the SAP and the FRP pricing that sugar growers or the sugar millers have to pay the sugar growers. And the third element becomes the pricing part. So I think the pricing part will get capped. The runaway sugar rally that we've seen last year or the year and a half, again there is a glut in terms of sugar supply, both from the Brazilian region and a lot of surrounding countries are actually giving export subsidies because the production is high to probably export sugar. So I think somewhere down the line, I think one has to be selective within the sugar space. Okay,
so that's the view that we are getting in on the sugar rally, but we come to the discussion. Any stock that can be accumulated, because most of them have fallen 50-60%.
Yeah.
Any stock that looks good in this sector that can be accumulated?
So I've got a diversified player called DCM Shriram.
Okay.
So what this company does is it's obviously present in chemicals, chloroalkali, chlorovinyl. They've commissioned a new facility in Bharuch. So the chemical part of the business is running at full capacity utilization, and that is giving the necessary leverage on a consolidated basis. For the sugar part, I think the management made it very, very clear. I mean, if you look through the transcript and Q3 numbers, the volumes have obviously gone up, but the pricing, as we were mentioning, has come down, both in terms of core realizations as well as byproducts, whether it's molasses or the otherwise. So large element in terms of the expanded capacities, both in chemicals and sugar, that the company is embarking upon, will give it a kind of a hedge. So I think even if sugar realizations go down, I think the volume effect will have a neutral effect for the sugar business in overall SOTP. While the chloroalkali business, the chemical business, you're looking at the Shriram Farm Solution business, the Finesta business, I think that should prop up because caustic soda prices are moving higher, and that should give it the edge in terms of an exposure both towards chemical, caustic soda, chloroalkali, as well as sugar. So I think it's got a sugar component, but it's diversified as well. So DCM Shriram is something.
So it's a hedging strategy, yes. Probably. Chintan, anything in the sugar space that looks interesting to you?
Okay, practically nothing at this point in time. But if at all I have to name one company which is pure into a sugar play, I would rather go in purely on the valuation front. I'll go with Dhampur Sugar as one of the counters. The valuations looks to be fair enough, and there is a lot of banking that happened on the ethanol story, which is not really picking up. So purely from the valuation front and only on the sugar counter, if I really have to be talking about one particular stock, that's going to be Dhampur Sugar without any doubts.
Okay, Mayuresh, sugar is a very geographic play because there's something in UP. This thing, any region that benefits better than the other in case the sugar cycle turns. Which are the regions that that would be in a better space to capture this upturn?
So it's Maharashtra and UP.
Okay.
Darshan. So a large element in terms of the last sugar season when we produced around 20.3, Maharashtra produced 4.2 million tons. When you're talking about a number of 29.2, Maharashtra is expected to produce 10.2.
Okay.
So I think as the production numbers for these two states obviously keep on growing higher, I think what happens typically in a sugar cycle is that because the cash outgo is huge for sugar growers, a lot more acreage in terms of sugar sowing starts taking place, and the yield or the sugar output that actually comes through from crushing, I think, is far higher. A lot more crushing has actually started in the first half of the sugar crushing season. So I think almost 500 odd mills are crushing at full capacity. So I think the numbers that you're probably talking from October to March are way higher than what you are really expecting. But this is because of the benefits that the farmers are getting, as I said, through the state advised prices or the fair and remunerative prices. But again, I think the cycle might go on for at least a year and a half before it starts reversing. Okay,
so I think there seems to be the consensus view that we're getting from our guest is that there seems to be weakness. The rally probably at this point of time will be stagnant. DCM Shriram is something that Mayuresh spoke about, and on a valuation perspective, Dhampur Sugar is something that Chintan spoke about. And the final stock that we want to speak about is Adani Enterprises. Now, I think what spooked the market yesterday was the tweet by Subramaniam Swamy in terms of finding out how the debt situation is there. So what we are asking is that the market is spooked because of this debt concern, but are these valid concerns for Adani Enterprises, and is there more downside on Adani Enterprises? That we are asking. So Mayuresh, are these valid concerns what Subramaniam Swamy has said in terms of whether they will be able to repay their debt? Are there issues with debt, and is there more downside here?
Maybe. So I think that's the only way I can answer that. But largely, again, I think if you look at their business model and mix, I think the coal trading business has done exceptionally well for them. And again, I think the kind of margins that they have reported for Q3, I think the potential in terms of the peak margins that they reported a few years back, I think it's still significantly lower. The volume growth has been significantly higher, and that can create the leverage at least on that part of the business. The renewables business, I think continued investments are required on that front. So I think the cash flows on that extent get constrained. And the third element, again, largely for Adani Enterprises, is also the exceptional income that is derived. So I think further income will come in from Rio Tinto, and that can create the additional gains that the stock is looking at. And if you look at the reported numbers and an SOTP valuation, I think, and you compare the coal trading business on any EBITDA to international players, I think it's fair to assume that it's trading at reasonable valuation unless we start getting the higher EBITDA multiples or the margins that we're talking about. But the other components of their business, including the solar renewable business and the sum of parts for their mines in Indonesia and otherwise, I think it's fair to assume that the stock is probably trading at reasonable valuations at this point.
Okay, reasonable valuations. What about you? Do you think that debt concerns are valid for Adani and there could be more pricing pressure on the counter?
So these are statements and not a published report. So typically, we will rely more on to what is published than what is actually heard and spoken about. But yes, overall, when we look at Adani Enterprise, the debt concerns seems to be slightly on the fair side, because it's a high debt company, and the debt is almost as good as I mean, it is more than 100% of its equity at this point in time. So there is a lot of pressure due to the debt on the organization. But as I rightly mentioned that we do not cover this particular stock much in detail. So all I would say is that looking at the kind of a debt coverage, which is only 2 times of what the overall business model is, we see that there is a lot of debt concern onto this particular stock. But validating what Mr. Swamy spoke about could be really difficult without any data on hand.
Okay, so that's the view that's coming in on Adani Enterprises. Chintan obviously doesn't cover it in much detail, but he does believe that debt could be a concern. Mayuresh, in terms of this Australia business, will it have any bearing on the Adani group? Because there seems to be a lot of trouble as far as their Australia business is concerned.
It's very difficult to gauge that, and that's what I said. It's very difficult to gauge ifs and buts scenario, right? So even if one puts a probability of certain things going right and certain things not going right, along with what Chintan and you rightly mentioning, I think the debt levels are high. Obviously, the cash flows are getting constrained because I think a lot more investments need to get into these businesses of renewables, of coal mining, of coal trading, and that probably puts a constraint in terms of their operating cash flows. So I think it's a fair bit, as I said. I think.
But is debt a concern? If you look at the numbers, let's ignore what Subramaniam Swamy said. If you look at the pure financials, what Adani Enterprises has put out, are the debt numbers a little bit concerning to you?
The debt numbers are on the higher side, and as I said, because of continued investments that is required.
But will their cash flows be able to? Are they in a position to repay? Because certain companies we know that will not be able to. They're in trouble. But is Adani on the verge of trouble? Can their financials? I'm talking about pure financials. Yeah. Can their financials support the debt levels?
It seems so at this point of time at least, but it's very difficult to gauge if they keep on acquiring assets going forward. So I think that creates the additional burden in terms of servicing their debt. At this point of time, yes, I think they can service their debt levels, but I think it's a struggle in terms of getting those operating cash flows. So as I said, I think we find it very, very reasonable. So not taking a bull call on this stock at this point.
Okay, so that's the view that's coming in on Adani Enterprises. Mayuresh believes that valuations are fair, and to be fair to both our guests, it's a statement that was said by Subramaniam Swamy, but financially what it looks on the reported numbers, debt seems to be a concern, but it seems that currently they will be in a position to manage it. With that, it's a wrap on today's Hot Money. Mayuresh, thank you so much for joining me. Chintan, thank you so much for joining me on the show. Ask BQ comes up next. Stay tuned to Bloomberg Quint.